Follow the smart money. That's easy to say, but it's really hard to do. You'll find hot stock tips from your friends, coworkers, and other market pundits. They're going to try and tell you to invest in gold one day, cryptocurrency the next day, and make millions in marijuana stocks the next. Although it's usually best to avoid them. I personally try and stick to strategies laid out by Warren Buffett. And there are two Warren Buffett indicators I check often. The first is one of Warren Buffett's favorites. It shows total stock market cap to GDP, and it's a good long-term indicator of market valuations. And the second indicator goes in tandem. It shows Berkshire Hathaway's total cash position. I was very fortunate to be able to travel to Berkshire Hathaway's annual shareholders meeting 5 years ago. And it was legendary to see Warren Buffett and Charlie Munger answer questions for hours on end. Munger's in his 90s, Buffett's in his 80s, and they're both sharp as a whip, fielding questions from a wide range of areas about their holding company, Berkshire Hathaway. I've learned a great deal from them. For example, gold is a terrible investment. I've actually written on that topic 6 reasons why I personally don't own gold. And Buffett and Charlie Munger also avoid investing in gold. I'll leave that research down in the comments below. Also, it's no wonder why millions of other investors seek out Warren Buffett's advice. If you invested $100 with him back in 1964, it would have turned into about $2.4 million today. A single $100 bill into over $2 million. All right, let's dive into Warren Buffett's favorite indicator, the stock market cap to US GDP. Total US stock market cap to GDP has climbed above 150%, and that's not surprising after over a 10-year bull market. But it's now above the 2 previous highs, as you can see in this chart. The last 2 times the Warren Buffett indicator climbed close to this level, a stock market crash followed. This is a great high-level view of the market's valuation, and it's just one of many stock market crash indicators that I follow. I'll leave a link in the comments below to that additional research. Investors have pushed up stock prices, but the underlying economy hasn't grown at the same rate. This has made it hard for value investors. As a result, Warren Buffett is piling up cash while waiting for better buying opportunities. This next chart I have for you shows the changes in total annual cash and cash equivalents with Berkshire Hathaway, Buffett's holding company. Since 2008, Berkshire Hathaway's cash position has climbed about 500%. The company is now sitting on $122 billion. For comparison, that's just over the size of Ecuador or Puerto Rico's economy as measured by GDP. The 10-year bull market has made it hard for Buffett to find worthwhile investments, yet he's willing to wait for better deals. The investing legend knows that losing the battle for yield today can result in winning the long game. Over 53 years, Berkshire Hathaway has underperformed the S&P 500 only 17 times, and some of those lower returns were back-to-back. Missing a few years of returns is better than buying into an overvalued stock market. Let's go ahead and look at stock market return expectations based on current levels. The Warren Buffett indicators that I've showed you today are just some of many pointing to an overvalued market. For example, the popular PE ratio sits at about 22, and that's well above its long-term average of 16. When the PE ratio is 22, the S&P 500 has returned an average of 4.1% each year for the following 10 years. And I did that calculation on cumulative annual growth rate. And to be honest, 4.1 is a terrible risk-adjusted return. This chart that I have for you shows the correlation between the PE ratio and subsequent 10-year returns. It includes over 50 years of data. That's a lot of data points. This is compelling evidence to avoid buying a basket of stocks for the long haul today. Wait for the PE ratio to revert to its mean or drop even further. Investing is a game of probabilities. By crunching the numbers and pinpointing trends, you can improve your odds and magnitude of success or successes. Ideas are important, but the data to back it up is crucial. And the PE ratio is just one of the other indicators and many more that I've showed you today. Once again, in the comments below, I'll leave a link to research on a few other indicators that are predicting potentially a stock market crash next year. If you want to improve your investment strategies and understanding of the world, it's good to look at long-term historical trends. The PE ratio and Warren Buffett indicators are a good starting place. Now, I really appreciate that you stopped by, listened to me today, and checked out my research. This is just a for fun kind of passion project on the side. I work full-time, but I do use a lot of my off hours to work on researching these ideas. And if you enjoyed this video, I'd really appreciate it if you just tap that like button down below, as well as subscribe to my channel. I'd also really appreciate any feedback. Drop a quick comment. Let me know what you're interested in, and I can put together unique research based on what you want to see. I know how to uncover some pretty unique financial information, and I'm very happy to share what I find. All right, that's all for now. And if you want to see some other recent research, you can check out these two recent videos.